I just want to get straight to the point. Inflation is about to crash the real estate market in just a few months. Real estate is up like 20% year over year. Stocks have been absolutely crazy. Wood itself is up like 2 to 300%. And these are crazy times in the market. Inflation is the main catalyst behind all these crazy returns in these different market sectors, and I'm going to explain why inflation could and potentially destroy the real estate market very soon. More institutional investors have been buying up real estate more than ever, and well, what happens when they all buy? Well, the prices go up because there's a higher demand with a limited supply. We all know the market is crazy, and a pre-approval letter about now, it means nothing because even if you are approved for a mortgage, good luck actually securing and finalizing a deal. You have to be ready and prepared to jump at any instant, and it seems like offering $50,000 above asking is still not adequate. Right now, the entire market is kind of on the fence, and it's waiting to see what inflation is going to be in the short term and in the long term. There's been data coming out that inflation is happening right now. Just last month, it was up 4%, which is crazy in comparison to the 2% inflation that we've seen over the last decade. The supply chains are so backed up right now that that's the main catalyst for all this inflation that we're experiencing right now. However, once that is all sorted out, it should at least minimize the inflation to some extent. Right now, the Fed is stepping in and saying that everything's going to be all right. Inflation is going to be a little bit in the short term, but overall, it's going to be about 2% year over year. Interest rates are eventually going to go up, and everything's going to go back to normal. However, nobody believes what they're saying. What we are waiting to see is if the Fed can actually control this, or are they just speaking out of their... If everything goes south, then interest rates and inflation are going to go through the roof and basically screw everyone over. The impact on the interest rates will thus
crash the real estate market.
And I'm going to get into a little known secret in the real estate world and how you can calculate how much it will go down. It's called the 10x rule. Every single time that the interest rate goes up or down by 1%, the home values also fluctuate by about 10%. So if the interest rate goes up 1%, the home value should go down 10%. We're in this weird balancing act where we've seen inflation happening right now, but we're also waiting for the Q2 and Q3 earnings, which that's going to really dictate where the future will hold us. The Fed is talking about tapering and injecting less cash into the markets, and they want to also reduce their purchasing in the mortgage-backed securities. Currently, they are buying over $40 billion per month worth of these mortgage-backed securities, which is crazy. But when they stop buying at that crazy rate of $40 billion per month, well, the mortgage rates will eventually go up. So if you're a real estate investor, or you want to be a real estate investor, or you want to be a homeowner, any kind of place in the real estate market, what should you do from here on out? Well, in my personal humble opinion, I would say definitely go and lock in a mortgage at these low interest rates and basically wait until this stuff sorts itself out. So you have a pre-approval letter waiting whenever you want to jump on a deal. The main key is you want to be in the market before this taper because there will be two paths that are going to basically fork, and we don't know which way it's going to go. Path number one would be inflation. The markets react to inflation. People are actually priced everything into it, so there's no big effect. Prices will go up, however, the inflation will dwindle and home prices will basically stabilize. That's very short term, and it should play out between September and October when these data sheets actually come out for the public to see. And if that all happens, the inflation settles down and the Fed were right, well, the Fed were right. However, the housing market will stabilize a little bit, but they won't necessarily crash. It's just they won't go up about 15% year over year. But unfortunately, there is the other path, and that is if inflation does ramp up very quickly. If this short-term effect can transcend into a long-term effect, and now it's affecting us for the next 3 to 5 years, we're going to have a pretty big issue. This would be if the Fed decides to raise the rates a little bit sooner, and that's not out of the possibility. Let's say they just raise it 2%, which right now it's about 3%, so let's say interest rates are at 5%, which is not out of the realm of possibility. That's an overnight crash in the real estate market of about
20%.
So as you can see, if you are in the real estate market right now, and let's say you do have a mortgage, if you have a 30-year fixed rate mortgage, you're going to be fine. The inflation actually might help you a little bit because it will eat away at your interest rate. However, if you have a variable interest rate mortgage, you might be in for a crazy roller coaster because if they decide to spike up the rates overnight, well, your monthly payment on your house will drastically change. And if your monthly payment on your mortgage changes from 25% of your income to 45% of your income, well, that's a drastic change in your financial life that you need to be aware of. Only time will tell what will happen in the real estate estate market and what the Fed is actually going to do, if it'll work, if it will just go completely out of control. Who knows at this point? Really appreciate you guys watching this video. Please like it. It helps out the channel a ton. If you're not subscribed, subscribe so you're up to date on all the latest and greatest content. Good luck in the markets, and I'll see you guys next time.